Hey there, happy Easter weekend. This is week 14 of the Des Moines and Central Iowa real estate market. And I start this week with a question. What came first, the chicken or the egg? Well, actually, in terms of real estate, which came first, the buyer or the seller? That's what we're going to talk about this week at Simply Des Moines Market Values Market Update. And again, like I said, it's week 14, 2023. We're into the second quarter of the year. And of course, the dashboard is where you should go every day if you want to kind of get a quick overglance of what's going on in the real estate market. That's at DesMoinesMarketValues.com, posted every day late in the afternoon or early evening. And let's jump right in here to the question for the day here. Um, with it being Easter, I was sitting around trying to figure out what we're going to talk about tonight because of the holiday and everything, and the thing that stuck in my head was, are we short of listings or are we short of buyers? And the more I thought about that, the harder it became to really distinguish where we are short right now because it's just such an odd market. We haven't seen this market in several years. We'll talk about maybe why that is here in a little bit. So first of all, here this is just a screen capture of the for sale and pending sales section in the unit sales, or at least in the unit comparisons. And what I want to point out here is that we're currently sitting at 2,455 homes on the market as of Sunday, April 9th. And we're sitting at 2,315 homes in sale pending. And there's a difference there of only about 140. If you recall a few years back, I did this inverted market where I showed you, how many homes we had on the market versus how many listings, and that was such a wide spread. I mean, we had way, way more homes in the sale pending bucket than we had for sale, and now here we are, April 9th, second quarter of 2023, and we're sitting here right now. We're not in an inverted market at all. We have 140 more homes for sale than we have under contract right now. And we're not seeing that gap really change much here in the last few weeks, which is kind of making things a little more frustrating for some of us. So here's just one of the graphics that I follow. This is the homes for sale, all homes for sale compared to 2022 and 2021. So we're looking back the last 2 years, and we're currently 40% up over last year. And that's a pretty good jump. So, if you're going to answer this question, are we short listings? Are we short buyers? Or what type of a market are we in? It might be easy to quickly argue that, we just need more listings. Well, or we need more buyers because we have, 40% more listings out there on the marketplace. If we look at the sale pendings and you look at that, where we were compared to last year, we're down 20% versus last year, and we're down quite a bit, even more than that, from 2021, where we hit our maximum, our high record of 4,600 homes in the sale pending there in about mid-May. We're not going to hit that this year. There's just no way that I see any path that we're going to hit anywhere close to 4,000 homes in the sale pending bucket at one point in time this year. It's just not going to happen. So another place I looked to see if maybe we can answer this question is I looked at the showing time report. This is the report I pull from showing time every once in a while. And the gold line, or that orange line in the middle there, looks at 2022 versus 2021, as well as going back to 2020. And you can see that the last few weeks, we have actually seen a drop in showing activity. So maybe that says maybe we need more buyers, or maybe buyers are stepping out of the picture. I don't know. Those are the kinds of questions I'm trying to figure out with with tonight's show. So the last graphic here that kind of looks at this year over year over year. So we're looking back for 2 years, is the 30-day sales pace. In other words, these are the number of homes that go under contract within a rolling 30-day period. And this is different than the sale pending bucket. This is the number of homes that actually went under contract. And you can see that, we're just right at 1,250 homes in that 30-day sales pace as of today on April 9th. And, we are behind last year. We're behind 2 years ago, which is, we know that. That's just still kind of follows along the sale pending graphic of earlier. But, I think that as we watch this move forward, I think there's hope that this number will increase before it actually starts that downward turn that we typically see about May. So I'm really feeling as though we're going to see a little bit more growth this year, maybe into June, before we actually turn this number down. And I don't know why I'm really coming up with that, other than the fact that I just kind of feel like the market is really kind of it's so different that I think we're kind of poised for some good buyer activity all through the summertime and not seeing our slowdown. Another place I wanted to look here was by price point here, because okay, let's ask the question: is it by a certain price point that that maybe is slow or is selling faster? Well, obviously the lower price points are selling faster. We'll see that graphic in a minute, but we currently have the bulk of our inventory in that $300,000 to $400,000 price point. That is the starting point traditionally for the new construction inventory, as well as kind of the median price point, because our median list price right now is 367.9 versus 364.9 a year ago. And so, if that's our bread and butter price point for listings, and there's no doubt that this is why we have the most number of homes for sale in that price point. But if we look at the sale pendings also by this same scale, by price point, one thing you're going to notice is that all of a sudden now, yeah, there's still activity in that $300,000 to $400,000 price point, but look how fast it drops off when you get above that price point. It actually goes into just double digits above the 500,000 price point per $100,000. But also the median price at pending. So this is not what it's sold at. This is the price that the homes were last priced at when they went under contract. It's not the sold price, it's the price that the homes went under contract at. Currently, this year, as of April 9th, was $294,990 versus $298,000 a year ago. So we're seeing this pricing, these buyers that are coming out, they're actually buying a little bit lower in the price range. Why is this? Well, obviously we have higher mortgage interest rates, so we have a little bit less buying power. Maybe that's what's causing that. But I think that also it just might be the fact that, the inventory levels there. So if we kind of look at these two graphics overlaid here, and I've kind of put the for sale above here, and I'm going to put a star next to that $200,000 to $300,000 price point, where we have 465 homes for sale right now, and we're at 369. That's the highest number. That's the most active area in the sale pendings sides. And I think this is where sale pendings really kind of drives the conversation, because that's where the buyers are actually going under contract, is in that lower price point. So, now I'm thinking, maybe it's probably listings. Maybe that's the answer. I don't know. Let's take one more look before I give you the verdict for this week's question. And we're going to look back at the real estate cycle. This is that real estate cycle that I talk about, about every 3 or 4 months or so. And I talked about this last at the year-end report. And of course, the real estate cycle is made up of four portions or 4 cycles, stages of cycles in our marketplace: expansion, peak, slowdown, and recovery. And I would say that we are definitely on the slowdown side. And the indicators that say we're on a market slowdown are that home inventory is decreasing. Well, is it really decreasing if we have more homes for sale than what we had in the last couple of years? How can I say it's the home inventory is decreasing? Well, it's actually decreasing in the price points that we need more homes in the most popular price points, that under $300,000 price point. That's where we are actually seeing inventory decreasing. Yeah, you can find inventory all day long in that $300,000 to $400,000 price point and on up. But right now, that's really where the slowdown is and inventory is decreasing in that lower price points. Obviously, we've already seen buyers that are out there that are looking maybe just outside of that price point are having more time to make their selection, so they could you could argue that they do have a home buyer selection advantage, which is an indicator of slowdown. But even those prices that are under that $300,000 price point, yes, many of those are still selling very, very quickly in bidding wars, but not to the extent that we've seen in the last 2 or 3 years. So I think that buyers do have some advantage when they're looking at homes. Reductions, we know that's common. That's happening every day right now. We're seeing almost double the price reductions that we've seen in previous years weekly. And the price increases are not coming on hardly at all. I mean, we'll see some occasional seasonal price increases from new construction, but for the most part, we're not seeing prices going up overall. We're seeing sellers reduce their pricing and trying to get their homes sold as we get into this spring market. And obviously, days on market or time on market is also increasing. Now it's picking up the pace because we're heading into the heat of the spring market. But all spring long, we were in 45 to 60 days on market, where in the past we were, 10 days, 5 days, in some cases, a couple of days. I think at the heat of the crazy market of COVID, where we were selling homes on average, within 2 or 3 days. We're not seeing that same type of pace that we've saw in the past. So the question, do we have a listing shortage or a buyer shortage? And I wish I had a sound effect of a drum roll. I'm not going to try to do it here on my desk because I got too many things. It'll just rattle. But I would say the verdict is that we do have a listing shortage. It's honest to God, it totally goes against everything that you would think if you're looking at the overall home inventory levels right now, where we have more homes for sale by 40%. But I say that we have a listing shortage because it's in that under $300,000 price range. And that's where the buyers are right now. That's where the buyers need to be. We need to fulfill those buyers so that the sellers in those under $300,000 price point will come out of the woodwork and begin to buy in that $300,000 to $400,000 price point. Real estate needs to have these actions happen at the lowest level and move their way up. In other words, otherwise, there's no incentive for home sellers to sell or for home buyers to put their home on the market if there's not inventory. So we're really kind of poised well, because you get above $300,000 price point. If a seller puts their home on the market, they're having better luck finding homes at a little bit slower pace as well. It's just that it's costing more because of the mortgage interest rates. But I think that as spring market comes on, I think we're going to see a little bit of easing, maybe not much, but a little bit more easing of mortgage interest rates, and I think that's where we'll be. So that's my answer this week. I would say we are in a listing shortage under that $300,000 price point. So let me know what you think. Am I crazy? Is this good news? Is this bad news? Is the market going to heck in a handbasket? Let me know in the comments below, and we will take it up next week. Thanks for joining me. Hit that like button, that thumbs up button here on YouTube. Leave your comments here as well, and we'll see you guys. We will see you all again next week. Thanks for joining me.